Ladies and gentlemen, I present to you Mr. Arif Habib.
Bismillahirrahmanirrahim. Mr. Aziz Mehman, Mr. Majid Aziz, Kalim Faruqi Sahab, Tariq Ikram Sahab, Excellency, ladies and gentlemen, Assalamu alaikum. It is an honor and privilege to have been invited by English-speaking Union to discuss the Pakistan economy and its challenges. Though I am not qualified to say that I am expert in this, but being a practitioner, being an entrepreneur, being an investor, in fact, we look at various Pakistani policymakers' moves, and in fact, we try to assist them in fact, informing them about the ground realities, and that's how, in fact, we end up in discussing the economic issues. And in fact, Mr. Kalim Faruqi Sahab, in fact, he watched me on television on Dunya, and after that program, he in fact sent me a message appreciating my views. And soon after that, Aziz Mehman Sahab also called me, and then Majid Aziz also called me, and they all in fact assured me that you can speak about the economic issues. So I thought that it would be a privilege to, in fact, speak and discuss before this important and knowledgeable audience of English-speaking Union, so I accepted this offer. In fact, many of the Pakistan's economy and its challenges, I think I always say that most of us, in fact, know about those. The knowledge is not that very important, but as far as the policymakers are concerned, I think for them, prioritizing those issues and challenges and implementing the ideas and, in fact, executing the solutions, which, in fact, are they listen from everywhere and they can prioritize them and then execute. So that is the, I think, would be very, very important for them to do. As you all know that our GDP size now has become $260 billion. It used to be $320 billion after recent devaluation. The GDP has now reduced from $320 billion to $260 billion, as compared to India's 2,597 billion, Sri Lanka 86, and Bangladesh 273. The last year, Pakistan, in fact, saw the GDP growth rate of 5.8% against India's of 6.7, Sri Lanka 4.6, and Bangladesh 7%. The per capita income has also declined in dollar terms to $1,355. It used to be $1,650 as compared to India's 1964. Sri Lanka $3,842 and Bangladesh 1,096. The Pakistan's total debt presently is about 78% of its GDP, as against India's 90%, and Sri Lanka 77%, and Bangladesh total debt is only 34%. Out of that total debt, the Pakistan's foreign currency debt is 30%. 30% of total debt is in foreign currency, valuing about $78 billion of government's debt and about 20 billions of private sector debts. So these are the numbers which, in fact, Pakistan has. The Pakistan's annual budget last year was 5,500 billion rupees, and the FBR tax revenue was 3,842 billion, whereas non-tax revenue was 450 billion rupees. Out of 3,842 billion, the provincial transfer were about 58%, and those were 2,217 billion rupees. Out of balance, about 80%, the 28% is used for debt servicing, and for defense expenditure, in fact, we use about 18% of our resources on defense. The development expenditure gets 19%, and the GDP, the fiscal deficit is about 6.6%. It was last year 6.6%, whereas the previous year was between 4.5% to 5.5%. Presently, the major challenge of Pakistan is the current account deficit. You see, there was a time when annual current account deficit used to be in the range of $2 billion. Last year, in fact, in the year 2017, it increased to $8 billion, and in 2018, it has increased to $18 billion. And the major reason for this current account deficit is the sharp increase in the imports. The imports have, in fact, increased to $55 billion last year, whereas our exports had declined to $23 billion US. So there was a huge gap of trade deficit, which in fact had resulted this huge current account deficit. And because of that, whatever good things had happened in Pakistan was in fact not accounted for. And everybody has become now critical. Because of current account deficit, the value of our rupee has declined sharply. The interest rates are also going up, mainly because of that, to attract the foreign remittances within Pakistan. And the government, in fact, now resorted to focus on export. So what was the need? In fact, Tariq Ikram Sahab was saying that I always, when he was chairman Export Promotion Bureau, he said I used to advise the government to declare the export emergency in Pakistan. So there is a need that the Pakistan, in fact, must increase its export. Unfortunately, for the last few years, the exports have declined or have been stagnant around 25 billion US dollars. The other major problem is the fiscal deficit. When the previous government came into power, we used to say that Pakistan were facing three major issues, three major problems, and that was fiscal deficit issue, the security issue, and shortage of power was three major issues. Fortunately, the power shortage and the security situation improved, but unfortunately, the fiscal deficit didn't. And particularly, until Pakistan was under IMF program, our economy was in discipline and we were doing well. Since we, in fact, came out from IMF program, we started faltering, and the numbers, in fact, getting worse day by day. So, and it has happened in all the last three tenures. In fact, I was watching when Shaukat Aziz was in charge of our economy. At that time also, until Pakistan was in IMF program, the Pakistan was doing good, stock exchange was good, rupee was stable. And unfortunately, when we came out from the IMF program, the things started declining. Similarly, in the regime of People's Party, that happened when we entered into IMF program under the Shaukat Tareen's regime. At that time, the stock exchange was about 8,000 points. and in fact then when we went into IMF program, it went to about 15,000 and 16,000 points, and soon after we came out of the program, these things started in fact coming down. In fact, I would share with you and discuss with you the reasons for these issues and these problems, and would also put some light on possible solutions of these issues. The third major issue in Pakistan is the high cost of production. The electricity in Pakistan is about 1.4 times of the region. The gas prices are about 2 times of the region. Regions mean India, Bangladesh, Sri Lanka, etc. And that is the major issue which is responsible for a decline in exports, or we are not able to attract the investments in exporting industries. So I think that is the major problem, and I'll also discuss it, how I think this can be overcome. The fourth challenge which Pakistan economy is facing is low ranking and ease of doing business, restricting foreign as well as local investment. In fact, there is a lot of red tape, and I think investors are not being properly facilitated to in fact make investment and do their businesses. The fifth issue is the low saving to GDP, leading to lower investment to GDP, so low savings rate and low investment rate in Pakistan. You see the other regional countries in fact have saving and investment risk more than double than Pakistan. So that is also a big problem. The limited job opportunities, because not much investment is taking place in the country, so that also denying the opportunities for job to our youth. Then the issue of losses in state-owned enterprises. You see the electricity distribution companies, steel mill, PIA, though their losses are not part of the budget. You see, those are the off-balance sheet items. They are, in fact, not being accounted for in our budget deficit. Whenever it would happen, I think our deficits would increase substantially. So I think there is a need to, in fact, fix this issue as well. In order to address the current account deficit challenge, I think everybody would say that there is a need to increase the exports and in fact produce the import substitution in the country, so the trade deficit is reduced and we are able to in fact cope up with this problem. Similarly, the other major and very important pool which Pakistan has is non-resident Pakistanis remittances. They in fact send about $20 billion through banking channel, and about, to my estimate, about $7 to $8 billion are being sent through non-banking channels. And according to my calculation, no non-resident Pakistani in fact sends more than 50% of their income on average. There are smaller people who send 80–90% of their income to Pakistan, and there are in fact non-resident Pakistani, they send nothing to Pakistan. So on the average, I believe that 50% is being sent to Pakistan and 50% is retained by them every year. It means more than the export and double than the export is their income, and more than the in fact amount which they are keeping with them outside Pakistan. So there is a need that we encourage them to in fact send their remittances through banking channels. Through that we can in fact increase our remittances through banking channel, and that would aid to the reserves of Pakistan. Similarly, there are some abuses in the dollar market here in Pakistan. in the open market, you see all the Afghan transit trade, mostly the Afghan, whatever they import from Pakistan, they buy the dollars from open market of Pakistan and send the remittances and send the TTs to Pakistani exporters. So those are the Pakistani dollars which they buy from our market and then import goods from us. Similarly, the under-invoicing of import and export, and particularly to China, because you all know that the numbers with, in fact, China has of export to Pakistan is about $18–19 billion, where the Pakistani side, in fact, officially says that their import is $14 billion. So it means about $5 billion difference, which the importers do the under-invoicing and buy the dollars from open market here and send those through hawalas or through other means. So these abuses, if those are in fact controlled, you see in the month of August, the current account deficit has declined to $600 million only. So once when we were having a meeting with Prime Minister, I said that if I would have in your place, I would have in fact seen what happened in the month of August 2018, where our current account deficit has declined to $600 million from $2 billion in the month of July. So that was the period, he said, then he replied to that, in that period, army in fact sealed the Afghanistan borders. And only because of that, $600 to $700 million were in fact were deposited by the open market traders into interbank market, and which in fact increased the reserves here in Pakistan. So I said that ask army to do it again, and so in fact that is being controlled. The non-resident Pakistanis also should be encouraged to make investment here in Pakistan. You see that they in fact are not taking much interest in investing in Pakistan, except buying plots, you see. There again, a very limited amount comes here as their investment. There again, there are issues, because first they have to in fact convert their white money into black, and then they are able to buy the property. So that also is possible when they do their transaction outside the banking channel. So there again, there is a need that we plug those avenues for them. So, and as far as the you see the returns in investment in Pakistan, may it be stock exchange, may it be real estate, has been in fact excellent and are much higher than the regional countries. In the stock exchange, I was looking at the numbers. For the last 10 years, the stock exchange, after this decline of about 25%, the average return for the last 10 years is 21% in rupee terms and about 16% in terms of dollars. So dollar return of 16% is unheard in the regional countries. Similarly, the real estate investment has paid off, though we were having security issues in Pakistan. Despite that, the real estate market, in fact, has given a return in excess of 25% here. So with those very good returns, we have not been able to convince the non-resident Pakistanis to make. Similarly, in industries, you see the average return on equity of Pakistani listed sector is 18%. So that 18% also is very attractive, and we have not been in fact able to attract them. So there is a need that we should pay attention to create their interest into Pakistan, make investment, make money, and give them such products whereby they can in fact put their money into Pakistan. I think in the current circumstances, it is, I think, good for them as well, that they in fact look at Pakistan, they make investment in houses here, they make investment in stock exchange, in equities, they in fact make investment in industries as well. The power sector here has been giving return in excess of 18-20% in dollar terms. So I think Pakistan lacked marketing. They were not able to, in fact, attract them here. Though many of the foreign investors were not very much looking at Pakistan because of securities issue. When they looked at the companies were doing well, they liked the companies, but they in fact were worried about the country risk and security situation. But now, alhamdulillah, things are getting better in terms of security issue. So Pakistan can now, in fact, market itself aggressively to attract investment both from non-resident Pakistanis as well as the foreign investors. So these are the few areas where, if the policymakers pay attention, can in fact overcome this issue of current account deficit. Fortunately, I think for the last 2 months, the imports of Pakistan have declined. In June, the import was about $5.8 billion. It has now come down to $3.8 billion for the month of September. So that has declined. Though the export, in fact, has not increased much. It's about 4% increase in the last one quarter. And especially in the month of September, the export has in fact declined by about 18% vis-a-vis August. So in the previous month, in the month of September, it was lower by 18% than in August. So I think again, the government is in fact has come out with some policies whereby they are in fact focusing to increase the export, and the Commerce Minister, Industries Minister has committed that they'll be in fact protecting the local industries. They would in fact encourage the raw material imports at zero duty, and they'll in fact put low duty on intermediary goods, and they may put higher duties on finished goods. So in fact, I get a lot of comfort when I hear the Commerce Minister about their future policies. They are also in contact with China, and the Prime Minister in fact is visiting China on 4th of November, and Pakistan in fact asked duty-free access of its products to be exported to China. And China in fact substantially has agreed to allow a large number of products from Pakistan duty-free. So that, and with other, the government will have to in fact negotiate better terms under FTA as well, and create capacities to export goods from Pakistan. As far as the time to problem and as far as the fiscal deficit is concerned, I think you see a major sector, in fact major sector of agriculture, which is about 20% of the GDP, in fact they don't have the tax on them. And similarly, the other 18% GDP is trading sector, which is in fact contributing only 1%. So there is a need to balance. The industrial sector in fact contribute more than 22% of its GDP. So if we take out the agriculture from GDP and we calculate the tax to GDP, presently the tax to GDP ratio is not 12%, it's over 16%, which is as per international standard. But I think government also is not very efficient or innovative in structuring the budget. You see, whatever they plan under the PSDP, those projects which has the appetite from the private sector. For example, in the last 2 years, the government in fact invested in RLNG plants of about over $3 billion. And those $3 billion were from PSDP, and those LCs of those units were opened from our reserves. So they could have easily avoided to in fact get it financed through private sector. They would have encouraged the private sector to make their investment. That would have brought down their budget deficit as well, and their reserves would have been saved through those. In the last amendment bill, the current finance minister in fact has understood it, and he in fact has increased the overall development budget, but through budget they have in fact reduced the allocation. So PSDP would now be carried out through the government finances with a lower amount, but they would in fact offer projects of national importance to private sector and get it financed. That would, I think, reduce the burden on the budget. On the side of high cost of production, I think presently the cost of the gas to gas companies comes to about 488 rupees before this devaluation, but now I think this cost would be 550 rupees per MMBTU. But government in fact has put a GIDC on gas consumers. The government in fact had budgeted about 150 billion rupees for GIDC taxes, but because of the stay orders and from the court, the government in fact got only 12 billion rupees. So many of the in fact gas users, they charge that GIDC from their customers and consumers, but they are not paying that tax to the government. So government is not in fact benefiting from this, and the consumers are paying that tax, and the manufacturers in certain areas, they are benefiting from it. So I think there is a need that GIDC should be done away with, and whatever in fact they have rationalized the prices, I think that is in the right direction, because the companies were in fact having the liquidity problems, and that was a step in right direction. Similarly, in the electricity side, I think there is a need that government must in fact focus on better energy mix. Presently, the units on furnace oil, they cost between per unit cost is manufacturing cost is between 20 rupees to 40 rupees, whereas the new projects on coal-fired power plant, RLNG, or wind power and solar, that ranges from 7 rupees to 11 rupees. So they in fact need to close down the furnace oil projects and focus on these coal-fired and RLNG and wind power and solar power. That would bring down the cost of production of electricity in the country, and that they will be able to then be pass it on to the consumers. Because, and if there is need be, I believe that this policy of devaluation, I don't agree with that. That I think is a disastrous for Pakistan, because it will bring up the inflation high, the interest rate would go high, and cost of doing business would go even further high. So, and on the other side, in fact, I have not seen any correlation between the devaluation and increase in the export. I run the figure for the last 20-25 years. There was a period when the dollar was at 60 rupees. At that period, in the 5 years period, our exports were double. But we have seen that the depreciation in fact was introduced, and I think the recent example, though they have in fact depreciated the rupee substantially, but our exports have not increased more than 4.5%. The fourth area is low ranking in ease of doing business. There again, government needs to pay attention, and there the bureaucrats be in fact trained that they facilitate the investors. low saving and low investment is also an area where I think government should also focus on. Limited job opportunities is also a very, very big issue, and it could be a very political issue as well. Though government, in fact, has been saying the areas where the government can, in fact, increase the job opportunities is the agriculture, construction, IT. These are the area where I think the job opportunities can be increased. And fortunately, these are area where the indigenous raw material and are in fact required. So nothing much is required to import to in fact increase the opportunities in this area. This announcement of 5 million houses, I think, is very, very much doable. In fact, we discussed with Prime Minister as well that what happens. You see, you all would know that on superhighway Karachi, there was a period where before Bahria came, the prices there for 1 acre was 25,000 to 50,000 rupees only. And now in Bahria, the price of 1 square yard is more than 25,000 rupees. So what we propose to the Prime Minister, that what they should do, they should in fact provide the land to everybody of 100 square yards free, and that the master planning allows to retain 5% for commercial. When all the houses would be built there, the price of the commercial, which is 5% of the total, becomes 100,000, 50,000 to 100,000 rupees per square yard. So the value of that would yield them, the government, more than 15-20 million rupees per acre, the value of which is not more than 25 to 50,000. Similarly, the development cost per square yard is 3,000 rupees, or for 100 square yard, the development cost would come to 300,000 rupees. So the buyer should be in fact asked to contribute that 300,000 rupees in 30 months' time with a monthly installment of 10,000 rupees. So that I think they would be able to, and they must in fact allocate the land and this scheme of development first, and then they ask for constructing the houses. Because once those plots are developed, the value of those plots would become 300,000 investment value will become 2.5 million rupees or more. So the 2.5 million rupees would become their equity, and the banking sector would easily be willing to give them loans to construct the houses. So it's a very, very much doable, and I think they have already discussing the policies, and they will come out with a very, very efficient policy in that respect. Again, IT is the area where Pakistan can in fact also create jobs and can also in fact export and earn dollars in that area as well. Finally, I would in fact say a few words about CPEC. I think CPEC is also a blessing for Pakistan to me. CPEC is a ECA credit made available by China to Pakistan. The $60 billion allocation, out of this 20 billion is government-to-government loan, and that government-to-government loan is for 20 to 25 years at a interest rate of 2.3 or 2.4%. Whereas the project loans, the 40 billion is for project loan and mainly for projects in power sector. There the average rate of interest is 4% above LIBOR, and those are about for 10 years period. So far, the government-to-government loan, government in fact has utilized only or has done the financial close of $4 billion only. I think it is very low, and government should have in fact availed that amount at a faster pace, because the average development budget of Pakistan for both federal and provincial is about 12 to 13 billion US dollars every year. So whatever you in fact require in those, out of those development budget, I think those projects should be advanced and should be built through the that loan of Chinese loan, and I think that would be very, very beneficial for Pakistan. It will not only make available the necessary infrastructure, but would also save the cost as well, because the inflation rate in Pakistan is much higher than this 2.3% in dollar terms return. So that is also beneficial and win-win for China as well, because since it is a ECA credit, all the in fact projects, machinery and services will have to be bought from China. So China in fact upfront will be benefited with that. So you see that we have seen since the start of the CPEC a large number of power plants in fact are being set up. The cement sector, steel sector and other sectors also have been availed that facility from them, and because of CPEC, which in fact I saw is the other countries in fact felt the competition, and they also came to Pakistan to offer good terms for lending and for making investment, because we avail the Chinese facility in our wind power project. We avail the financing facility in cement from Islamic Development Bank and from Danish financial institutions and German financial institutions, and other I think local banks also in fact came out and they started competing with them. So that in that way Pakistan in fact has been beneficiary of this facility. But I think the only thing which Pakistan need to ensure that whatever quality of machinery is from Chinese original must ensure that those are good machineries, and they in fact run and produce the goods. So these are my thoughts about the current situation of the Pakistan economy. I'll be very happy to answer any question you have.